Welcome to the weekly report from FIBO Group. My name is Yuri Tihus. This week promises to be less volatile and quiet than the previous 2 weeks due to the lack of important economic data. The data that expected is the report on the monetary policy of Australia and the consumer price index from Great Britain and the USA. During Wednesday's American session, traders will focus on the report from firms. On Thursday, there may be some volatility due to the publication of the index of industrial activity of the European countries. Friday will be driven by statistics on consumer prices from Canada. To summarize, we expect a quiet trading day on Monday and expect most traders to wait until Tuesday. On Tuesday, the Asian session will focus on the report on monetary policy in Australia. The Aussie dollar has been in a downtrend for some time, so traders may take a wait and see the release of important news. And it will not be surprising if the currency falls further. Recently, statistics show that unemployment in Australia increased to 6.4% from 6% in June. And as always, joining us directly from Australia, Andrew Masters, an expert from FIBO Group, specializing in the analysis of macroeconomic indicators throughout the world. Hello, Andrew.
Hi, I'm Andrew Masters from FIBO Group, and welcome to my report on the RBA Monetary Policy meeting. At its latest meeting, the Reserve Bank of Australia left the official interest rate on hold at 2.5%, which was widely expected. This means that the rate has been on hold for 12 months, the longest single period since 2006. After the latest RBA minutes meeting, the bank released a statement that growth will continue to be below par and inflation will fall. Board members believe that inflation is under control and have lowered their forecast for GDP to a range of between 2 and 3% in the year through June 2015, down from a range of 2.25 to 3.25% forecast 3 months earlier. On core inflation, the RBA lowered its forecast from 2.25 to 3.25% to between 1.75 and 2.7%. They said unemployment will remain high for at least another 2 years, and it's the first time since 2007 it has been above the US rate. On present indications, they stressed that the most prudent course is likely to be a period of stability in interest rates. This shows a big discrepancy between the Central Australian and US Bank, as the US is expected to raise rates next year, while the RBA will keep rates on hold, or according to some analysts, even reduce them. Although picking up through 2013, consumption growth looks to have slowed in the first half of this year, with weaker retail sales growth and consumer sentiment falling to below average levels. It remains to be seen whether this slower growth of consumption is temporary. The RBA also mentioned, and not for the first time this year, that the Australian dollar, which has gained about 6% since February, is overvalued by more than a few cents, and that investors should be careful with their exposure to the currency. The strength of the Australian dollar has weighed heavily on RBA Governor Glenn Stevens in recent months, as the exchange rate remains high by historical standards, particularly given declines in key commodity prices, and hence is offering less assistance than it might in achieving balanced growth in the economy. He also mentioned the currency is out of step with Australia's declining terms of trade and makes non-commodity exports less competitive globally. Mining investment, which has been a major driving force in the Australian economy for much of the past decade, is winding down and is expected to decline much further over the next few years. A pickup in non-mining investment has partially offset the drop in mining investment as companies take advantage of low interest rates. Looking ahead, it looks like the Australian economy may be in for a tough time. If the momentum in the US economy continues to power forward, this could also put pressure on the Australian economy.
Thank you, Andrew. Let's continue our weekly review. Later on Wednesday, we will focus on data on the consumer price index of Great Britain and the United States. This news from the United Kingdom will be closely watched during the European session. In the last 5 months, this indicator has caused a lot of volatility and interest in the British pound. Strong data should boost the pound. The US dollar may strengthen if the consumer price index comes higher than expected. During this year, value of index is about 0. The FOMC indicator released during the American session will be closely watched as traders seek a direction on monetary policy. As well as low unemployment and moderate inflation, traders took as a positive sign for dollar. Also, traders will look for signals on when the Fed plans to make its move on interest rates, which could cause high volatility in the US dollar. Finishing the week will be a round of statistics from Canada, including the release of the customer price index, which remained below 0 last month. A reduction in inflation could pressure the Canadian dollar, and it may continue on its trend, which began at the beginning of June. To summarize, Tuesday will focus on the Australian dollar, the British pound, and the US dollar, as traders weigh the FOMC report where we expect high volatility. Finally, on Friday, we will see important data on the consumer price index from Canada. Thank you everybody and have a profitable trading week.